Could Ethereum's next big move after Pectra finally brings staking-based ETFs into reality? In today's video, we're breaking down exactly how Ethereum's upgrade positions it for a new wave of institutional products, and what it could mean for investors. We'll cover staking fundamentals, the regulatory hurdles, and the potential market impact if staking ETFs go live. Whether you're a long-term ETH holder, a trader, or just watching the crypto market evolve, this is a shift you need to understand. Stick around, because what's coming next could completely change Ethereum's role in global portfolios. Let's dive in. Ethereum's Pectra upgrade. Quick recap of why it matters. The Pectra upgrade is more than a technical step. It's a major evolution for Ethereum's scalability, security, and efficiency. By enhancing proto-dank sharding and transaction compression, Pectra makes Ethereum much faster and cheaper to use. This upgrade also strengthens the network's decentralization and resilience, two key attributes regulators and institutions look for. As Ethereum matures into a more stable, scalable platform, it becomes increasingly attractive for financial products like ETFs. Pectra essentially lays the groundwork for Ethereum to not just be a platform for innovation, but also a serious yield-generating asset class that fits into traditional investment structures. Ethereum Staking Basics: how the new ecosystem works. Ethereum staking allows users to lock up their ETH to help secure the network and validate transactions. In return, they earn staking rewards, similar to earning interest on a savings account, but through blockchain participation. Validators are responsible for confirming blocks and maintaining network health, and in exchange, they receive newly issued ETH and transaction fees. With the upgrades post-Pectra, staking becomes even more efficient and accessible. Staking isn't just for tech-savvy crypto users anymore. It's positioned to become a mainstream, yield-bearing activity that institutions can tap into, especially through ETF structures designed for wider investor access. Why Ethereum is now perfect for staking-based ETFs. Ethereum's network has matured dramatically, making it an ideal candidate for staking-based ETFs. With consistent uptime, robust validator performance, and transparent reward mechanisms, Ethereum now looks much more like a stable, predictable income generator. Post-Pectra, staking rewards are smoother and transaction fees are lower, which increases overall returns for stakers. Institutions and ETF issuers prefer assets that combine yield with credibility, and Ethereum checks both boxes today. A staking ETF could offer investors the ability to earn passive yield without the complexities of running a validator themselves. It's a natural next step for Ethereum's growing financial integration. Institutional appetite for staked ETH exposure. Institutional investors are hungry for yield, and staked Ethereum offers exactly that. With bond yields fluctuating and traditional savings vehicles offering diminishing returns, ETH staking presents an attractive alternative. Firms like BlackRock, Fidelity, and even pension funds are showing growing interest in crypto products that combine growth potential with predictable income streams. Staked ETH, providing both exposure to Ethereum's price and staking rewards, fits this demand perfectly. Artificial intelligence portfolio models are also increasingly factoring in crypto yields alongside traditional fixed income. Institutions want products that make exposure simple, regulated, and high yield, and a staking ETF could check all those boxes. Legal and regulatory challenges that could slow it down. Even with all the enthusiasm, regulation remains a major obstacle. The SEC and CFTC are still debating whether staking constitutes a securities activity under U.S. law. If staking rewards are treated like interest payments, ETFs offering them might face additional layers of scrutiny and compliance. Some regulators also worry that centralizing staking through large ETF managers could undermine Ethereum's decentralization. While progress is being made toward clear frameworks, uncertainty could delay product approvals or force issuers to adopt more complex structures. Investors need to stay cautious because regulatory shifts could quickly change the risk profile of staking-based offerings. How a staking ETF would actually work. A staking ETF would operate much like a traditional commodity-backed fund. It would buy and hold actual Ethereum, then actively participate in staking through validators to earn rewards. Those rewards could either be reinvested back into the fund to boost total returns or distributed periodically to ETF holders. The fund would charge a small management fee for handling the staking logistics. Key factors would include ensuring custody security, maintaining active validator participation, and accurately accounting for yield distribution. A well-structured staking ETF would make it seamless for everyday investors to benefit from ETH staking without technical headaches or self-custody risks. Risks investors need to watch for before jumping in. While staking ETFs sound promising, there are real risks investors shouldn't ignore. Staking carries slashing risks, meaning if validators behave incorrectly, they can lose a portion of the staked ETH. Validator downtime or poor performance could impact yields. Regulatory shifts could also force ETFs to adjust structures, suspend staking, or face new compliance burdens. Plus, centralized control of staking through a few large ETFs could weaken Ethereum's decentralization, creating future network risks. Investors need to stay informed, read fund prospectuses carefully, and treat staking ETFs as a high-potential but non-risk-free part of a diversified strategy. Big picture: what post-Pectra Ethereum could mean for 2025 and beyond. The post-Pectra Ethereum landscape looks like the beginning of a new chapter, not just for crypto, but for traditional finance too. Ethereum isn't just about DeFi, NFTs, or smart contracts anymore. It's evolving into a yield-bearing asset that behaves like a decentralized bond. This makes it incredibly attractive for portfolio managers balancing growth and income. If staking ETFs succeed, Ethereum's integration into mainstream investment strategies could deepen, stabilizing its market cycles and expanding its user base. For long-term believers, the opportunities look bigger, and the competition to capture that opportunity is only heating up. Ethereum's evolution after Pectra is setting the stage for a whole new financial era, and staking ETFs could be the next massive leap forward. Thanks for spending time with me here at Nexus Dividends. If you found this breakdown valuable, hit that like button, comment your thoughts on staking ETFs, and don't forget to subscribe for more sharp, fact-first crypto and investing insights. Stay strategic, stay curious, and I'll see you in the next one.